Do you find it difficult to do the analysis of a stock? Do you think it is a very advanced and complicated topic? Let me tell you it's not. In today's video, I will give you handhold support, and if you stick with me till the end, it is my promise that you will have no doubt whatsoever. And if you find that interesting and helpful, do two things for me. First, destroy that like button and subscribe to my channel. So if you have done those two things, we can move forward with our today's video. So without wasting any time, let's learn how to do the analysis of a stock. Let's jump into my screen. So the website today I'm using is called screener.in. All the tools, all the metric that we use to understand, to help to do the valuation of a stock, is all available in screener.in. If you can't find the website, I have given the link in the description. You can click the link on the description and you can land in this page. But it's very simple. I will show you. Nothing you have to do, just go here and write screener. So the first website will come. It will look like this. Now click on this website, right? Link. Now you land in this home page. So today the stock we're going to talk about is called HDFC Bank. Now whatever I will teach you applies to all the stocks. So every stock you can go through, all the stocks will be available here. And all the things that I will teach you, I'll just teach you the basic and base level of any stock analysis, and based on that, with experience, and if you start doing your own analysis, you will learn a lot of things. Now in HDFC Bank, so first thing we have to understand why we do valuation, right? Why we do the analysis of a stock? To understand, to analyze whether this current market price of HDFC Bank is 1000 rupees. Now we do the analysis of a stock so that we'll understand whether this 1000 rupees will become 5000 in the next 10 years, 20 years or not. Is the stock overvalued? Is something wrong in this company? All these questions will be answered after doing the analysis of a stock. So stock will tell you, it's like a report card of a company, right? We remember we used to go to school and we used to get report card from our teachers, and based on those report card they used to do the analysis whether you are a good student or not. Same thing in stock market. We do the analysis of a stock. It's like a report card of a stock. So let's go by step. Here HDFC Bank, here you will understand the current market price of HDFC Bank, which is 1003 rupees to be precise. Now here you will find the link of HDFC Bank. So if you'll click it here, you will land in HDFC Bank website. Now everything is available here, so no point to be clicking on this. Now this is BSE. If you click on this BSE, you will land in the BSE page of HDFC Bank. Now there are two things, NSE and BSE. HDFC Bank is listed in NSE also and in BSE also. Now price will be just 1 or 2 rupees difference. In HDFC Bank, the name, if you click it here again, you will land in, now the server is not available, so I'm sorry, but NSE, the name of the stock as listed is HDFC Bank. Now here the market cap, how much market share does HDFC Bank has? It is 15,43,327 crores worth of market share this HDFC Bank has. Current price, as I told you, it is 1003. High, it is intraday. How much high and low? This is, I think, a year. Yes, it is in year how much low and how much high has been made by HDFC Bank. Now stock PE ratio, which is to 21.3. Now I have already made a video on PE ratio. What is PE ratio? And I have explained it like a baby. Even a 5-year-old can understand what is a PE ratio. I'll give the link in the description. If you have not watched what is PE ratio, go and watch that video after this video. So in simple, if I'll tell you what is a PE ratio. So current market price is 1000 rupees of HDFC Bank and PE is 21.3. So I'm paying 21.3 times to buy the shares of HDFC Bank. In simple, if you want to understand in depth, go and watch that video. Now what is book value? So book value is nothing but total asset, like total asset minus total liability is called book value. So this is the current asset net worth of a company. So that is called book value. Total asset minus total liability is called book value. Dividend yield is 1.10%. Now ROC is 7.51%. Now what is ROC? Now ROC means that it is help to understand how much company is generating its profit from its capital, including equity and debt. that is called ROCE, that is 7.51%. Higher the ROCE, better its numbers. Now, what is ROE? Next thing is ROE. ROE is that how much capital profit a company is utilizing to generate profit from its shareholders. Previously is for capital. This is just purely for shareholders, right? That is the difference between ROCE and ROE. I'll say it again. ROCE is in total capital and ROE is just for its shareholders, right? So I hope am I clear. If I am clear, write in the comment section clear and go ahead. Now the face value is 1 rupees. Next, the most crucial thing that people skip all the time. If we have to do the analysis of a stock, first we have to understand what is the company do. If I don't even know what does company do, how will I do the analysis of a company? No, right? So here if you go to about section, you will understand everything about the company. So HDFC Bank is an Indian banking and financial service company headquartered in Mumbai. It is the India's largest private sector bank by asset and the world's 10th largest bank by market capitalization as of May 2024. Now in 2025, it is almost over. It is the 6th largest bank in the world, HDFC Bank. Now, as of 2024, HDFC Bank has a market capitalization of 145 billion, making it the third largest bank company on the Indian Stock Exchange. In Indian Stock Exchange, it is the third largest company in India. Now, next thing is key points. This is what people skip all the time. Let me tell you, all the time they skip this thing. Now, we have read these things. Now, key point. The company is India's third systematically important bank with 15% market share in the banking sector, advanced, and a 37 market sector in private sector. We know SBI is the largest bank, right? It is also the second largest bank in India, obviously. It's amongst the top 3 government banks collecting direct and indirect tax for the government of India. It is a market leader in almost every asset category. So reading this will help you in understanding more about the company. So don't skip these things. If you don't know what your company does, if you just watch some YouTuber and if you watch some news channel, people will come and tell you buy this share and you just blind buy, then you're not a good investor. Maybe you can generate return, but at the end of the day, we have to become a good investor. That is our main goal. Now revenue, key ratio, everything you will find it here. Now revenue, retail banking revenue coming, where does the revenue coming from? In Q1 financial year 2024. So we are at 2025 end. So this is the old data. Retail banking, 40% revenue come from retail banking. Wholesale banking 27%, insurance 17%, treasury 9%, other is 7%. So 7% of its revenue out of 100% is coming from other sectors. Key ratio, Q1 financial year 2024. Now capital adequacy ratio is 19.3. Now what does that mean? So it is at total company's profit from its debt, right? How strong the company is for its debt. That is you'll understand in capital adequacy ratio. NIM 3.47, gross NPA non-performing asset, it is 1.3, net is 0.4, which is fantastic. The lesser the NPA, the better the company is. Cost to income ratio 41%, ROA is 1.9%, return on asset is 1.9%. Very good. Branch network you have to see. As on Q1 financial year 2025, the bank has distributed network of 8,851 branch. It has. You can just go to your next, area, you will find HDFC Bank, and 21,163 ATM. Now let me know in the comment section in your locality how many branches are there, how many ATMs are there of HDFC Bank, right? And 4,081 cities they are in, and 6,342 branch, 18,130 ATM as of financial year 2022, right? Now branch breakup. In semi-urban 34%, metro 28%, urban 20%, rural 18%, right? Loan book as of Q2 financial year 2025, the gross advance stood to 25 lakh 19,000 crore they have of loan. Deposit is 25 lakh crore deposit they are taking. Time deposit 65%, CASA is 35%. International business. So you can dig deep into these things. You will understand a lot of things, right? Now to make this video not very lengthy, I'll skip these things, but I suggest you, each one of you, to go and read these things about any company analysis that you want to do. Please don't skip this part. Now next, this is a chart of HDFC Bank. Next thing is, now if I'll go to Max, so it will show me the history from the day HDFC Bank was listed to this day. So if you look at here, the HDFC Bank in 2005 it was listed. Was at 27 rupees. Now current price after the stock split and everything, it is 1003 rupees. So in 2005, if you had bought HDFC Bank, you would have got at 27 rupees. Now it is per share value is 1000 rupees. So the chart shows a good upward direction. So very good. Next thing is PE ratio. Like I said, I have already made a PE ratio topic on this. So, but in sake of this video, I will explain it again. Now, PE ratio is very important to understand the valuation of a stock. So how do I don't want to be, go to a chartered accountancy and don't want to do all these things. I'll just give you a simple and clear answer. Now here you see the median PE is 26. So if the stock PE is above median PE, then it is overvalued. If the stock P is below median P, then it is undervalued. So stock median is 26 and the current P is 21.2. So it is undervalued because it is below median PE. Understood? So it is undervalued based on PE, not on other factors. Based on PE, it is undervalued because it is below median P, which is 26. So it will come everything auto calculated. Next thing is pros and cons. So this is the pro and this is the con. Pro are the good things, con are the bad things. So it is delivering good profit of 21% CAGR, compounding annual gross return. Company maintaining healthy dividend payout of 23%. Company sale growth is 16.4%. Now, con is 2.86 times of its book value, which I have already explained you in the beginning. Company has low interest coverage ratio, liability is high, and earning other income, they are depending on other income a lot. Now, these are the peer comparison. You understood? These are the peer comparison. Now, HDFC Bank, ICICI Bank, Kotak Bank, Axis Bank, IDFC, Yes Bank, IDFC, First Bank. So now to do the better analysis, what you do is you just compare, right? When you go to buy a apple, don't you just go and ask from two shops, kaise diye bhaiya? How much is per kilo? Someone will say 20 rupees, someone will say 30 rupees. Okay, 20 and 30. He's giving you at cheaper rate. I'll buy same quality, but I'm getting at cheaper rate in A shop. I'll buy it from here. You do the stock analysis, right? Same thing you will do it here, right? How you buy and go kirana with your mother, right? So you do the bargaining, you do the analysis where I'm finding the good product at cheaper price. Same thing you will do it here. Nothing complicated, right? Now if I have to add add one more metric, you go to edit column. And if I want to add, let's say if I want to add, for example, let's say peg ratio. Now this is not your peg, that 60 ml or 30 ml peg, right? This is just a peg ratio, which if the peg ratio is below 1, then the company is undervalued. If the peg ratio is about 1, then it is overvalued, right? So in peg ratio, if it's below 1, then the company is undervalued. Simple, right? If the peg ratio is above 1, then it is overvalued. So these are the way you can do the analysis of a stock. Next thing is quarterly results, right? I have made a detailed video on how to do the analysis of a financial reports. If you have not watched that video, click the link in the description. In the fundamental analysis playlist, you will find all the details. So I have already made a video on how to read profit and loss, balance sheet, cash flow statement, everything I have made, and even 10-year-old, 5-year-old can understand. So make sure you watch those videos. Now ratio, return on equity, right? This is very important. Higher the return on equity. So how much profit is generating from one shareholder, that you will find in ROE, right? Return on equity per share, how much profit is generating, that you will understand in ROE. Higher the ROE, better the company it is. Now shareholder pattern, again very important. So how much shareholders are there in a company? Promoter has 0% stake in the company. FII have 48% stake in the company. DII, Domestic Intuition, they have 36% as of September 2025. Government has 0.18% and public like you and me has 15.33%. So highest shareholder are the FII, foreign institutions, right? So this comes to an end of how to do the analysis of stocks. So I've explained you everything. If you have any doubt, leave me in the comment section and I'll definitely help you out, right? So if you go down, you will understand the nonsense news, annual report, credit rating, con call, everything you will understand it, find it here. But these are the basic things. That is the pillar of understanding the analysis of a stock. If you find that helpful, smash that like button and destroy the subscribe button. Thank you for watching. I hope you'd have learned a lot. I'll see you in the next video. Bye bye.